But if I told you the market is actually always hunting for something, let me take you through this chart that you are seeing here currently. So I don't want to draw a pattern now. I want to follow what the market has done here. So let's start with this low. So we start from now. Let's start from here because I'm going to draw. Let's start from here. We start from here and draw it to the upside, and then we move down. Notice how I'm using the wicks, not the bodies. So market went all the way up, came down here, went up, it came down, we went up. We are following what market is doing, and then we broke here. Notice how it has broken this low here. We went up and then came down here. We went all the way up with not this, not but this. It went just to take that high, and then after that all this happened. That's not your concern. You target this low, and then you can also target this low, and then price went to the downside like this. So now that we have been able to draw it, I want to just use this same pattern and then draw the structure and liquidity for you to see. So this is what we have taken from the market. We didn't draw it for ourselves. So let's go through it. So now we want to understand that pattern that we have just drawn from the market price action here. So we start from this low. We can see that this low took out this high. And immediately that happens, we are interested in that low. And it created this high here. This becomes the highest high it created after it has broken this low here. So we identify the highest high now as our major high after this low has been broken. Since this low is broken, we ask ourselves which low has or which high has caused the break. It will be this high here. So you see that the market, after breaking it, it created this low, but we are not, this is part of what even confused people more, because this low didn't do anything. You don't have to mark that low. You have to wait until it creates a low that will take out a high here. And before you even do that, you have to identify your liquidity, because you are interested in whatever the market is going to do when it comes to that point. So the market will travel back into that point, and that's your entry. You can use liquidity as a confirmation to enter, or you can have certain confirmations here that you can implement, and then from there the market trace to the downside. I tell you, normally you can risk very little and make a lot of maybe 4 5 hours, sometimes 10, depending on how the market is going to move. So if we come back here, let's take this out again. If we come back here, then we can use that same analogy to mark this price here. So we start by understanding that this is the low that pushed price all the way up, and it took out this high here and took out this high here. That's why we are interested in this low. Price has created this high here, and we are waiting until our low that we have identified has been broken. Pay attention to the wicks, not the body. So you can see here, this is the low that caused the break, and now we are interested in that high. I always say low, I don't know, it's the high that caused the break. So we are interested in that high that caused the break using the wick. Here we can see price followed through and then broke again. But this is what causes the confusion. If you don't know, you'll be paying attention to this. But this is just noise. So you can wait for price to trade all the way back. Immediately it has taken out this high out. We already know this becomes our what? Major low. But it has not yet taken out our liquidity. So we are going to wait for it to take our liquidity, which we have identified, and then we will be interested to get inside the trade from there. So this becomes our liquidity, and then this becomes our low. The market comes to the liquidity. Sometimes it just trades directly from the liquidity point, and then you don't even need to do anything. Most of the time, this is what it does. You put your stop loss above this high, and then you can target here as the first TP, or you can target the second low here as the next TP, and you can see market went all the way down there. Whatever happened here is not your concern. Even this structure can be traded. This is M15 structure. If you look at M5, you'll be able to use the same technique and then trade this consolidation that has happened here, because as far as this low has not been taken out, whatever is happening here is still going to be minor structure within the major structure. So this is it. You need to understand this and marking out your structure and then identifying where the liquidity is lying, which is very important, is very crucial to your trading. I bet you this will change how you see structure. If you need more videos on liquidity and structure, just comment liquidity and structure and I'll be doing more videos on this.